Hey there, Tamir from Fibonacci-Traders.com here with the weekly market review. I hope everybody's enjoying this weekend. Without any further ado, please hit the like, subscribe, share with friends, and let's see the weekly chart. By zooming out to the weekly charts, first we clear all the noise from the daily charts and lower time frames, and we can see clearly that the 416 on the SPY is a very strong resistance. Since May of 2022, each and every time price tried, reached it, failed to break up and above, except these 2 weeks in August 2022, 1 year of a very tough resistance. Breaking up and above this 415, 416 and closing above it at least 2-3 days, we are going to reach this gap over here, close it at the 421 area, and then we have 428 and 443 to the upside. If bulls will give up, 406, 400 to the downside as first levels of support, and then we have Fibonacci levels to the downside for future support. All we have to do, follow price, look left, use Fibonacci and trend lines that will help us to identify where price might be headed next with high probability. No other indicators are truly needed because all indicators, without any exceptions, they are all lagging. Look left, we can see we don't need any indicator to see where price came from. But as traders, what we want to do is to know with high probability where price will head next. And here on the cues, we have this trend line over here, the upper trend line, that helps us to identify the higher highs since October, September 2022. We have this trend line to help us to identify the higher lows, which means cues for now is in an uptrend until proven otherwise. Continuation above the 322. Most probably we are going to reach the 340 together with this red trend line. And here we have the roadmap to the future of the cues until proven otherwise. Uptrend channel. This is all we have to do. Candlestick analysis and the relationship with trend lines and Fibonacci levels. IWM 170 to the downside, 180 to the upside since middle of March. So for now, nothing special on the IWM. Long above 181, short below 170. This is my opinion, and of course everything you see and hear on this video and on my channel is my opinion only. It's for educational purposes only. Always do your own due diligence. Dow Jones. Trend lines are the true support resistance for price action, and now looks like the Dow finally breaking above it, finally closing above this trend line. Not surprising, it's the 5th time. Success. Now let's see continuation to the upside, where price of the Dow might be headed next. All we have to do, take Fibonacci, swing low, swing high, and there you have it. The 340, 341 resistance. Now, continuation above the 341, high probability, 348 is next. Above it, we have 357 and maybe all the way to the all-time highs at 370. But one candle at a time. Look left, where price came from, what it did in the past. Use Fibonacci levels, use trend lines as your guide and roadmap to the future. VIX continuing to break down. Now, next level of support will be the 1480. Oil. Close this gap. And if you follow me on Twitter and you saw previous videos, we knew that this gap will get filled because more than 80% of all gaps will get filled throughout time. Now let's see the 74 area needs to hold because as you can see in the past since December of 2022, this 74-75 area very interesting level and very important level of support now needs to hold long above the 83, because the 83, very tough resistance. Short continuation, downside continuation, a week or maybe 2 or 3 days below the 74, and then back to the 64. SMH, trend lines are the true support resistance for price action. Look at this trend line. The lower red trend line started over here, October of 2022, holding the higher lows, and not surprising, this past week held the low, bounce. Now where price might be headed next? All we have to do is take Fibonacci, you guessed it, swing low, swing high. Not surprising, Fibonacci gives us this one, the 248, continuation above it, 263, and maybe back to this upper red trend line that helps us to identify the higher highs. This is all we have to do. Candlestick analysis, Fibonacci, and trend lines. Check the Fibonacci-Traders playlist Academy playlist. 20 videos, free. 20 videos, each video 20 minutes or less, on how to become a better trader, technical side, psychology side, the mental side, the psychology behind trading, in my opinion, is the most important part of trading. This XLF, still from this trend line as support. This trend line now is a resistance. We had downtrend, retracement, back to the 50% retracement. Now let's see if bulls of XLF have enough power in their hands to break above the 33 area and above this red trend line. Then we have the levels to the upside for future resistance. XHB, you know this name because we talked about it in the past few weeks or so. We have waited for this break and we got it last week. Now, previous week, 2 weeks ago we got a break. Previous week we got a continuation, and now 73 to the upside is the next major resistance. We can take also Fibonacci from here, swing low, swing high, 73 to the upside, then 77 and 83 to the upside. If we'll get retracement on the XHB, first we have 69, needs to hold the support, then we have 67, and then we have this red trend line that will need to act as support because it was resistance. Apple finally at the 5th time breaking up and above, closing above this red trend line, and this red trend line goes all the way back to December of 2021, and each and every time since then price tried, got rejected, until previous week. Bulls came in strong, broke up above the 168. Now next level of resistance will be the 1676. Amazon, past earnings. We are past the most important earnings week of this earnings season. Next week we have Apple, AMD, but the major earnings week is behind us. Amazon, another week, another doji, and can we get to this purple trend line and break up and above it? We can take Fibonacci, swing low, swing high, and there we have it. Look at this. Downtrend, bounce, 50 retracement. Downtrend, bounce to the same 50 retracement Fibonacci level. The 110 is also the 50% retracement of this downtrend. Let's see, continuation and breaking above this purple trend line. Then we have the 117 and 130 to the upside. AMD with earnings coming up next week. We have uptrend until proven otherwise. 83 is holding. Let's see continuation above the 92 area, and then we have 102 and this trend line over here. This trend line, the upper white trend line, helps us to identify the higher highs. This lower white trend line helps us to identify the higher lows together with Fibonacci levels. This is all we have to do, and all we have to identify is the trend lines, Fibonacci levels, to manage our risk. Because as traders, the only thing we have full control of is our risk management. Nothing more, nothing less. Meta, if you follow me and you saw previous videos, we said that as long as this purple trend line is holding the higher lows, Meta will continue towards the 245. 245, look left. Since August of 2020, it was a very tough resistance, very tough support, until it broke to the downside, and now back to this area, which for now will act, most probably will act as a tough resistance, but Meta is in an uptrend, bullish run, super bullish run since November 2022 until this day. We have 170% to the upside. Some retracement will be very healthy at this point. Bulls needs to back up, get some air, fresh air, maybe towards the 192, and then next leg up. But for now, Meta is in a very bullish uptrend. Google, not surprising. Trend lines, you guessed it, are the true support resistance for price action. This upper red trend line is not giving up on Google. Earnings, no earnings. We have technical analysis. We have trend lines. This red trend line, as we can see in the past 4 weeks, very tough resistance. We have this lower red trend line as a very important level of support, where price will be headed next. You take Fibonacci, swing low, swing high, continuation above the red trend line, and above the 110, we have 115 and 124 as the next resistance for price action in the future. If bulls will give up, 104 needs to hold. Then we have the 100 level. The 100, look left, very important level of support because it was a very tough resistance in the past. Follow price, use trend lines and Fibonacci levels to manage your risk. Microsoft breaking above this trend line, above the 296 area, the 296 area, very important level of support and resistance in the past. Now broke up and above. Now we can take Fibonacci, swing low, swing high. 293 needs to hold as the first level of support. Continuation above the 308, we have 316 and 327 as the first resistance for price action in the future. Netflix, still barely, but still inside an uptrend channel. Doji, which means indecision in the market, basically not much of a movement on Netflix since end of March. As you can see, 4 or 5 weeks of not much of a price action. Uptrend continuation, 2-3 days closing above the 340. Short below the 317. Never be biased, always prepare for both sides. Nvidia on the weekly, same thing as Netflix, since end of March, 4 or 5 weeks, basically doing nothing, bouncing between the 260 and the 280 to the upside, long continuation above the 280. And never be biased, we also need to prepare for the short side. 2-3 days below the 260, we can start thinking to take short and use Fibonacci levels to manage our risk. Shopify, this lower red trend line holding the higher lows since October of 2022, and we have this upper red trend line that helps us to identify the higher highs. We can also take this trend line over here, doesn't really matter. We can do it like this. from here to here, and now we have a clear roadmap, uptrend channel for Shopify to the future. And until proven otherwise, some of you will not like this price action. It's a very tough price action to trade. Since end of February, nothing much between the 40 and the 48. Very tough price action on Shopify, but as long as this red trend line is holding the higher lows, Shopify is in an uptrend. All we have to do now is take Fibonacci, swing low, swing high, 49, continuation above it, 55, 63, and this red trend line to the upside. Short, because we are never biased, we always prepare for both sides. We will start thinking about short below this red trend line and below the 44.70 to the downside. Tesla, as we can see, we broke below the 165. This 165 is a very important level of support. Broke to the downside, all went to the gap, did not close it. Bulls are trying with all their power they have to avoid closing this gap, but in my opinion, as long as this gap will not get filled, we will not see a bullish momentum on Tesla. This gap needs to get filled, and then we might see next leg up on Tesla. All we have to do, follow price, use levels to manage our risk, and like, subscribe, and share this video. Help me grow this channel will be much appreciated. So I hope you found this video helpful. If you did, please hit the like, subscribe, share with friends, will be much appreciated. Don't forget to hit the notification bell. More videos to come during this weekend. Until the next video, stay safe.